Today, we're diving into how Microsoft is betting its entire $3 trillion future on AI. And we're going to look at it all through the eyes of a professional analyst. Let's get right into it. Okay, let's kick things off with a number that, honestly, is hard to even wrap your head around. $250 billion. That is the incredible commitment OpenAI has made just to use Microsoft's Azure cloud. A number that big, well, it's the foundation for everything we're about to talk about.
You see, a deal of that size, it's exactly why people are calling this the AI gold rush. And in this new frontier, the analyst report shows Microsoft in a pretty unique position. They're not just another prospector digging for gold. Nope, they're the ones selling all the picks, the shovels, and even the map.
So what's the bull case here? With the stock already flying high, why do some analysts think it can go even higher? Let's break down the optimistic view straight from the CFRA report.
First things first, you got to understand what Microsoft is today. You might still think of Windows or Office, but this chart tells a totally different story. Look at where the money is really coming from. It's dominated by productivity in the intelligent cloud. These are the two engines powering their entire AI strategy.
And the core of that engine, Azure, is absolutely firing on all cylinders. Now, the key takeaway here isn't just the huge growth. It's that it beat the forecast. Hitting 39% shows that the demand for their AI infrastructure is even hotter than the experts expected.
And this slide really nails the whole bull thesis. See, Microsoft isn't making just one single bet on AI. They're weaving it into absolutely everything. From the ground-level cloud services to apps like Copilot and even breathing new life into Bing Search, they're making money from AI at every single level. It's a full-stack assault.
And is it working? Oh yeah! Paid users for their AI assistant Copilot skyrocketed 160%, hitting 15 million. This isn't just Wall Street chatter. This is real customers, real businesses paying up.
But, whenever you see massive growth and massive spending, you're gonna find massive risk. And that brings us to the other side of the story, the bear case. What are the potential traps that could trip up this whole AI dream?
So, the big question from the skeptics is this. Is all of this explosive growth actually sustainable? Are we looking at a solid foundation here, or are there some serious cracks starting to appear in this new AI empire?
The analyst report really boils it all down to this one central tension. On one side, you have this incredible once-in-a-generation opportunity. But on the other hand, you have these huge risks. Like, what if customers don't sign up as fast as they're spending money? Or what if they become way too dependent on just one partner?
And this number, wow. This is the single biggest concern for the bears. A staggering 45% of Microsoft's future committed revenue, that's money they're counting on, is tied to one single customer, OpenAI. That is just an unbelievable level of concentration risk.
And on top of that risk, building the future of AI costs an absolute fortune. The report also flags that the crazy high spending on new data centers and all those advanced chips, well, it's starting to put a real squeeze on the company's profit margins.
So you've got this incredible, explosive potential on one side, and some very real, very serious risks on the other. Where does the analyst actually land? What's the final verdict here?
Well, believe it or not, despite all those risks, the analyst, Angelo Zeno, is sticking with a strong buy rating. The core belief here is that Microsoft's complete AI package, what he calls their complete AI stack, is just too powerful a formula to bet against.
And if you just look at this 5-year chart, you can see the market has absolutely rewarded that strategy, especially over the last year. But here's where it gets really interesting. The official recommendation from the analyst comes with a really crucial little twist.
Okay, so check this out. Even with that strong buy rating, he actually cut the 12-month price target. Now, why would he do that? It all comes down to the rationale. He's applying a lower PE multiple, basically how much investors should pay for the stock, specifically because of that OpenAI concentration risk.
So here's the bottom line. It's a strong buy, for sure, but it's a strong buy with a huge asterisk next to it. It's a big vote of confidence, but it's one that's being served with a very strong dose of caution.
All right, so let's zoom out for a minute, because this story is so much bigger than just Microsoft. What's happening here has massive implications for the entire tech world.
According to the report, the entire software industry is basically betting the farm on AI to drive its growth for the next few years. That makes Microsoft a critical bellwether. Their successes and their challenges are probably going to be a preview for what's coming for the rest of the industry.
And all of this leaves us with one final big question.
Has Microsoft built an impenetrable AI fortress that's going to secure its dominance for the next decade? Or is it a beautiful, gilded cage, one that makes its entire future dependent on the success of a single powerful ally? The answer to that question could very well define the next era of technology.